So, hello guys. Today we'll be talking about businesses that get better with size. So, इसमें fundamental theme of the whole video is कि I am not interested generally in companies that do not get better as a company as they grow, because I don't like areas जहाँ पे there's a market and there are 100 players fighting for market share and सबके पास थोड़ा market share रह जाता है. So in those opportunities, I'll just do the slideshow. Yeah, so in those opportunities, you usually will not make a lot of money. Maybe there are 10 companies in the industry, right? All of them go up like 10%, 20, 30, 40, 50%. And the cycle is over. So I do not like that. I like key industry is growing at a healthy, let's say 15%, right? But there are one or maybe two players which are gaining market share and they're just killing all the competition, and they are growing at 40% or 50%. The more is better, right? So in these opportunities you make the most quantum of money. So let's talk about how to spot this. And first of all, we'll have to see why size matters in a business in the first place. So there are certain businesses wherein when the business gets bigger, they get more efficient. Okay, margins improve. होंगे. You can see it very visibly. Let's just take the example of retailing, right? So if we take the example of Trent, I have Trent open here. So Trent May, what was the sales growth? Sales growth was 50, 55, 50, 60%, right? But the pad growth was much higher than that. So it got operating leverage, the margins improved consistently. So this all happens because in a retailer, I'll explain it here. Huh. So when a retailer grows, let's say they have the same two stores, okay, and in both of these stores of the same size, इनके यहाँ पे 10 कस्टमर ईच आ रहे हैं ऑफ द सेम बिलिंग वैल्यू. ठीक है, ऑल ऑफ दैट इज कांस्टेंट. तो इनका जो फिक्स कॉस्ट ऑफ एवरी स्टोर, लाइट, इलेक्ट्रिसिटी एंड जस्ट एम्प्लॉय कॉस्ट, ऑल ऑफ दैट रिमेन्स द सेम. जो उनका वेयर हाउस से सामान आ भी रहा है, उसकी ट्रिप्स उतनी लगेगी, राइट? एंड व्हाट हैपेंस इज, अगर ये 10 का नंबर अभी है एंड उनके इनसे रेवेन्यू आ रहा है इनको, लेट्स से 1,000 रुपीज ईच. सो 10,000 हुआ रेवेन्यू पर स्टोर पर डे. बट पर स्टोर पर डे लेट्स से इनके एक्सपेंसेस अभी इंक्लूडिंग द मटेरियल कॉस्ट एंड एवरीथिंग इज ऑल्सो 10,000. तो एट दिस रेवेन्यू दे आर मेकिंग जीरो मनी. ठीक है, बट इफ आई इंक्रीज द रेवेन्यू बाय जस्ट लेट्स से 10%, सो यहाँ पे 10 के 11 लोग आ रहे हैं, यहाँ पे 11 लोग आ रहे हैं, तो प्रॉफिट्स विल नॉट गो अप 10%. ऑफ कोर्स इट्स अ बैड एग्जांपल बिकॉज अभी जीरो है. तो द पॉइंट इज, जो इनका इंक्रीमेंटल रेवेन्यू होगा, अभी 10,000 बना रहे हैं दिन में, अगर ये 11 बनाएंगे तो उस जो एक्स्ट्रा 1,000 आया ना, दैट विल नॉट हैव द सेम मार्जिन एज ये 10,000 का. सो दिस इज हाउ एंड इफ दे गेट वे बिगर, इनके दो नहीं, इनके 200 स्टोर्स हो गए, तो इनकी जो कॉस्ट ऑफ इनपुट है, दैट इज द मटेरियल कॉस्ट, दैट विल ऑल्सो गो डाउन सब्सटैंशियली. सो बिग रिटेलर्स लाइक ट्रेंड तो अपना खुद ही बनाता है. Let's say a Walmart in US. So what happened with Walmart was कि they could source things at such a cheap rate कि they would sell at the lowest price of any retailer in the country, and they would still have the highest margins because उनको जो material मिल रहा है, जो goods मिल रहे हैं, it is at such a low cost because of their size. So whenever you go to a supplier, they'll just give you a discount if your quantity is very, very large, just to have you as a customer. So because of that, they had this cost advantage. And the same thing could be argued to have occurred in India. Let's say you can look at a Vishal Megamart, right? So a Vishal Megamart can source things at a very, very cheap rate compared to your local store. which also sells the same FMCG goods. So all of this just means ki the business gets better with size and ends up gaining market share from other competitors, which is what we're looking for. So this also happens in hotels and restaurants. Ki jo staff cost and everything, that is the same. Property maintenance cost is the same, but if the occupancy goes up, let's say marginally 10%, the profits may increase will be more than 10%, right? And if occupancy goes down by just a little bit, a profitable company might just end up making losses very quickly. So currently, the biggest operating leverage you can see is in tech businesses by far. So in tech, you don't have to scale your expenses necessarily with your revenues. So these tech giants have, so Google has a very Meta has a very high net profit margin because of this simple thing that, so in the case of Facebook, the business gets better with size because of network effects, which is also a key factor. So basically, if all your friends are on Facebook, you will have to be on Facebook, or let's say Instagram, or WhatsApp. They're all owned by Meta, right? So if my friend is on WhatsApp, I will have to also use WhatsApp. I cannot be saying कि oh तू पहले Telegram use करता हूँ मैं, तो you also install Telegram. So Telegram overtaking WhatsApp globally, market share wise, is it's very tough. They'll have to pay everyone to switch, which is just, you can just buy the company at that point, right? So it's a very strong moat of network effects, and that is why it can have such high margins and no competition. So these kind of companies give you the opportunity to make a lot of money when you average up. So just for example, let's look at Page Industries, right? It was scaling up really quickly after, let's say, 2009. So every quarter it would grow at upwards of 30%. So this is kind of the dream scenario, that you have a stock that just keeps on performing, does not give you a reason to sell, and you just keep adding up. You just keep adding to your position, and until you see a big drawdown and sell. So e- just because जो actual quantum था from the base, जहाँ से you can argue the company reported an increase in revenues. So जो ये बेस था यहाँ से लेके यहाँ तक, this whole area of returns was so large कि you could enter हल्का सा late, let's say 20-30% ऊपर, just for it to confirm, and you could exit also at, you could lose this 20-30% of your returns. You would still make a killing beach mein. But if a business does not have a sustainable earnings growth, or a trigger for that, which is, let's say it's a retailer, so then it is more likely such a thing happens compared to, let's say, a B2B player. So a B2B player will not have the same advantages a retailer can have with size. They might get more inefficient, they might have more challenges. So all of these things are very crucial to look at in a company before ever thinking of investing. That what is that is this earnings growth sustainable? Is this a long term trend? Is this just a one hit wonder? And you never know for sure, but you can always try to increase your odds. So that is it, guys. I'll see you in the next one.